So if you take a look at the economic calendar, it was kind of a short week as far as economic news. It was a quiet week, I should say. And you can see right here, yesterday, there was a lot of buildup to the consumer price index. When we take a look closer at that consumer price index, what you can see here is 0.2% growth. And I think a lot of folks have stopped looking at the annual numbers. And the reason why they've done that is because there's been so much aggressive behavior over the last years by the Federal Reserve to try to control inflation that these effects of the tactics that they've taken could be coming in. And so looking out a past, just a couple of months is not going to be helpful because that was in a whole other time. So looking at the 0.2% and maybe extrapolating out for the next year, multiplying by 12, you get 2.4%. Same when you factor out the more volatile food and energy. 2.4%. That's getting closer to the Fed numbers. And if the Fed was only using this report, it would kind of signal that they're done raising rates. But I'm not so sure because the Federal Reserve totally made some comments on Thursday after this here report, basically saying that they're prepared to do more tightening. This morning, we got wholesale inflation, and it was a little bit on the hotter side. You can see here they were expecting 0.2% growth. It grew by 0.3%. When you start to take a look, when you factor out the more volatile food and energy, same thing, a little bit on the hot side. And then here's this one where they factor out supposedly this very volatile trade services. Now, as soon as they factor out trade services, it kind of comes back into where expectation is. That is one of the only kind of hints that the government is paying attention, or the Federal Reserve is paying attention to these things called trade services, which when we go shopping at the stores and we go to the gas pump and we go and to restaurants and things like that, man, it sure does seem like prices continue to go higher.